testing. Okay, there we go. I'm gonna post the links. Hopefully everything is working okay. I don't see anybody in here yet, but maybe it's me. Let's see. Okay, so it looks like we're good. So I'm gonna just post this link real quick, and then I'm gonna get started. Alright, we'll just give a second because looks like it's live. So we're going to be charting on NQ. I have NQ up right now. I think I'm going to put a clean chart though. And we will use that. Let me roll fast. I think that would be the best thing. We are gonna do clean chart. Let me just real quick. We're gonna go. Okay, so I think we'll use this chart. Hopefully this is clean. All right, let me just check real quick, see if anybody's in here so we can get started. I know this is my smaller channel, so sometimes it takes a second. If you don't mind, can you please comment in the chat if you're able to hear me okay? I just want to make sure that you guys can hear me okay. For those who are here, that would be greatly appreciated. You can just comment in the chat if you can hear me or not. And then we will get started. All right, I see a few people coming in. So today we're going to be doing weekly bias for week of March the 29th, 2026. As normal, I just have to put a little disclaimer out here. I was trying to find my chapstick. It might be in the other room. But I wanted to put a little disclaimer. This is obviously for educational purposes only. These are going to be just my observations of what I see on the chart right now. Obviously, anything can happen, okay? I do not have a crystal ball. I will do my best to share what I see and my perspective. I do think this is kind of a really intriguing week coming up. It's a big week. So we have non-farm payroll, which is the first week of the month. So we're moving from March into April. And we also have a lot of just various red folders throughout the week. I think if I'm not mistaken, starting on Tuesday. So we will take a look at the red folders. We're going to take a look at the fear and greed index. We're going to look at a couple of things that I like to look at to kind of get a general perspective. I kind of personally, I don't know if I've shared this with you guys, but I look at charting as like playing a strategy game. Okay, I've learned various techniques, and I think that one of the best things you can do is take all of the little things you know and leverage them as like additional confluences against each other to give you a perspective. Because at the end of the day, it's up or down. Okay, we're just trying to decide, are we going up or down? You got a 50-50. You could flip a coin and be like, all right, I'm betting up for the week. And you're either going to be right or you're going to be wrong. Okay, everything extra that we talk about is to just increase the probability that you're right. So with that being said, we're going to get into it. I do need you guys to do something for me. Thank you so much for giving me a comment to confirm you can hear me. I do need you guys to do something for me though. If you can please hit the like button, it helps me out so much. I'm going to give you some tea this week. I'm going to give you some tea. Hopefully I will not lead you astray, but in exchange for the tea, if you can just hit the like button, I think I did a pretty good job last week. So if you didn't watch that video, you can watch it and compare to what actually happened. I don't think I'm that bad of a trader. So, I think it's going to be a good conversation if you can just give me a chance. But with no further ado, let's get into it. So right now I've got NQ on my chart. I like to use nested time frames. Nested time frames are basically time frames that are based on Goldbach times. They are times that will show you things that regular time frames do not show you. I believe that that is for a reason. If everybody was looking at nested time frames, you'd be able to see things that would really give you conviction as compared to time frames that don't tell the whole story. And if you're somebody like me who trades using things like order block theory or ICT fair value gaps or rejection blocks or honestly any of his PD arrays, nested time frames are gold because price respects them. It respects them better than it does traditional time frames. I personally think traditional time frames are like they ain't got that tea, okay? So with that being said, you're going to see me talk about time frames today that are just not traditional. And I was going to try to do it on regular time frames, but honestly, y'all, I can't. So y'all just have to roll with me. If you want to learn more about anything you hear me talk about, you're going to have to go find Goldbach people. I don't recommend people anymore because I've been burned. So there's not a lot of Goldbach teachers, so I think you can kind of figure it out, who to go to based on what I talk about today. But I'm going to say, I'll just leave it at that. So let's get into it. I think this is going to be kind of fun, but just be prepared for the fact that I probably will be showing time frames you have never seen before. It might be a little weird, but you can always just go to the time frame that's close to it. You should be able to see the same thing. So right now I'm looking at the 9-day. And I'm actually going to delete the drawings I have on here just in case I have anything in here that I would not want to share. So on the 9-day, there's really not much here that I see that I would leverage. I think one thing that I'm noting that I do see is the fact that we do currently have quarterly SMT with the Dow Jones. SMT basically tells you when smart money is starting to transition their money from one index to the next. So it'll either be moving money from, let's just say, the NASDAQ into the Dow Jones or ES or etc. So it kind of gives you a heads up when the market is going to turn, because traditionally you will see SMT before the price turns. However, the presence of SMT does not mean the market is about to turn. As long as you do not get a candle close before that SMT happens, typically it's going to just erase it and it'll become invalid. So for example, last week I talked about the fact that we had SMT on the 1 month time frame, and that SMT, sorry I had moved your desk, but we did, it did trade through that SMT before the end of the month. So that basically, it nulled that SMT. It means nothing now. However, on the high time frame, we do have SMT across several big time frames. I don't know if you guys can see it right now, but we have SMT between ES and NQ on the yearly at all-time high. ES took all-time high a couple of times when NQ failed, which means NQ was protecting the high. And I believe it's for one of the reasons that I'm going to show you guys here in just a second. Again, if you guys could just do me the biggest favor and just like this video, it helps me out a ton. That's the only thing I'm going to ask for you, and I hopefully think it'll be in exchange for some really good conversation today. But just remember, this is all educational content only. You got to do your own work, okay? I'm going to just keep saying that throughout this video. This is not trading advice. This is just my educational perspective. Baby, I had closed that because it gives a glare. Sorry. All right. So NQ. I'm looking at the 9-day. I am noting the fact that we do have this SMT here at the lows on the quarter. Quarterly is going to be over here, and I think this candle closes in 2 days. So when the end of the month happens, you're going to have a quarter candle close, and if we still have SMT on that candle close, I would for sure be looking to see what is going to happen as a result. So basically, NQ has until the end of the month to take this low here, just like NQ had till the end of the month to take that monthly low that it did take last week. So we want to keep an eye on this week. If YM does take it, then the likelihood we're going to continue to the downside is definitely going to be there. All right, so that's something I for sure will be keeping an eye on into Tuesday, Wednesday price action. Next, I do want to spike out, looking at just some other time frames that I do like to use. We've reached the fair value gap on a lot of the big time frames that I use. So 1 month, 27 day, 3 month, 14 day, 9 day, 56 day, 81 day, quarterly, 6 month, 9 month, like all of the major time frames. For the most part, we have reached the targets that I had. So it's essentially the first targets. Price does not have to continue from here. Like it definitely could, and I do think that there's a high probability that we will continue sell side, and I'll tell you guys why here in just a moment. But I say all that to say, I'm just flipping through some really high time frames here. I do think that the likelihood we're going to keep going is for sure there. I'm going to show SPY because this one is one that really makes me lean into that idea. On SPY, SPY, we do have a 12-month bullish fair value gap, and I believe there's 2 of them. You've got one down here at 476.34, and there's one down here at 453.94. So it's kind of like in this environment with all of the bad things that are happening, there's no, inclination that anything is going to change anytime soon. I do have those targets on my eye on those targets, especially because they rest right above a 12-month bullish order block, and it's a strong draw on liquidity. Michael always said that the higher the time frame, the stronger the draw. Price is efficient. Price is going to seek liquidity and imbalance, as well as using several things from Goldbach. That target is definitely a target that seems to be a possibility. I have not made that like a target that I may hold to. I probably at that point will just get in when we get rejections and then trade down to it if that does happen. But I don't really like to hold puts into target just because puts move fast, but once they're over, the move out of there can be very aggressive. So I do want to be super careful about that. But as you can see with SPY, you were inside of a 3-month busy here. I think there's a 6-month here as well. Let's see. It's a little lower. So you can see, so check this out. We got the 3-month. Right here you got a 6-month bull fair value. We're like right there. If you were on the 5-minute time frame and you took a trade, you entered at the high, right? And you see this red candle pulling back. What's the likelihood you think that it's going to stop before hitting that busy, that bull fair value gap? If you were on the 5-minute and you saw this, would you think price is going to continue to that gap right there? Remember, price is fractal. So any logic you use on the 1 minute, the 5-minute, the 15-minute, the 30-minute, the 45-minute, the 1 hour, the 4 hour, the day chart, it's all the same. It's the same logic. So if you come up and you're on the 6-month and you see a setup that looks very similar, doesn't mean it has to go there, but it's just like when you look at that, again, all we have to do is be correct about up or down, right? And if we're leveraging everything we know, this is telling me at minimum I'm not trading longs. I'm not trading longs when price is clearly demonstrating bearish order flow. So again, this is just something to keep in mind as well. So I definitely am looking at this target. I think I have a contract that will go in the money here once that hits that low. So I've kind of been trying to look at that. It doesn't look like if anything, you swoop down here with a wick to trade out of there, if anything. Okay, and then it's a balanced price range down there, y'all. I'm just saying. If you guys have any questions or comments too, don't feel like you can't put in the chat. Would love to get you engaged in us talking. But yeah, so okay. We got a lot of things that say the possibility that price continues lower is definitely there, right? So that is that's the monthly. But the thing I was talking about on Threads is this. So I'm going to turn this on. I do use Goldbach and Goldbach ranges, and so you see how the nested time frame, so the month, this is the month. Look at the bodies. The bodies don't respect the range, right? Look at the 27-day. Look at the bodies. Bodies tell the story, wicks do the damage, right? So on Goldbach, there's two paths, and there's a guy, I will say this gentleman's name only for this video. I can't tell you anything else about him. I can't tell you anything about his mentorship, but there's a guy named Lux Pips who has a video where he teaches the Goldbach range paths masterclass, I think is the name of that video. That video is how I learned how to read the range paths. I have more logic I use with the range paths, but that's how I was able to read them. So I say that to say that guy is how I learned how to read Hoppy Laka's range paths. So I say that to say using range paths, which are really, really cool if you haven't found them. There's two algos. There's an algo 1 and an algo 2. Algo 1 is ICT MMXM. Algo 2 is ICT 2022 model. This algo path that the market has been on for NASDAQ on the 65-61 dealing range is an algo 1. Algo 1 does not retrace back to the fair value gap. Algo 2 does. That's the biggest difference between the two. So you have an extension retest here, which basically starts the algo. I always say extension retest is like when you used to play Nintendo back in the day and you would hit that button, that reset button. Boop, you just keep hitting that reset button to get that game to restart. That's what this is. So last year we pulled down, price rejected equilibrium, pulled down to the extension. This is your extension. Reset the extension. From there, price went straight up. Algo 2 retraces, it goes 41 back to 17. We did not do that. So we're on algo 1. It continued, went straight up. So algo 1 goes 0, 11, 59. So 59, you find support on 59. Price got above it and found support on 59. 59, 97. So 97, you can't really see it on this time frame, but 97, you want to see price find resistance. So price did find resistance. And there's other techniques you can see to notice how price respected this level. Once it found resistance at 97, it goes 97, 83. So you want to see 83 find resistance. This SMT here, to me, in addition to the CSD we had, there was a breaker here, a bear breaker, that confirmed the resistance of 83. So we should not come back to 83 if this algo path is correct. Once you lose the premium breaker on algo 1, price should basically come straight down to the final target, which is 29. So it goes 83.29. So 0, 11, 59. Wait, I gotta get my cheat sheet because I always between step 4 and 5 I always get thrown off. 0, 11, 59, 97, 83, 29. Okay, I was correct. So yeah, we have followed the algo path beautifully. It took a long time. Like once we got here, I was like, when is it gonna fall? I was thinking we were just going to come here and then fall. But I'm like, clearly you need a catalyst. And this is a big move down. So it's got to be something big, right? So when you look at it, you can even see this candle here missed the partition. But it looks like an ICT bull breaker. I don't know if you can see it. But basically you got your low, high, lower, low, higher, high. That's a bull breaker. This also, there's so many things that just show like this was like what I'm seeing. There's so many confluences that align with this idea. Like, and this is the last step in this path. So I say all that to say, in my mind, we should make this last move down. I don't know if price is going to be able to retest the premium breaker. So you go premium breaker, discount breaker. I don't know if price will be able to retest that PD array on the algo paths. And this is all Hoppy Laka, okay? His books, all of that's in there. You know, if you're like me and you like to geek out and like nerd out on all the different concepts, I've gone down several rabbit holes. That ain't for everybody. you do not have to do that, but I enjoyed it and I did it. So such is life. But I say that to say we could find support at EQ and that could be it, because you really only need to retrace the equilibrium on a move. And if you throw Fibonacci on this move, which is pretty close to this range as well. Oops, I missed the low. Hold up. This is your high. If you throw a fib on there, you should still reach the discount breaker. So I'm holding my runners. I'm not gonna sell until we get that. So that is definitely what I'm thinking. So my current target right now is 29, which would make it 22,585 at minimum. I do think there's a chance. So with the paths, basically once price reaches the end of the path, it has like 3 things it can do. We can consolidate at equilibrium and just go sideways between the premium breaker and the discount breaker, or we could continue down and reset the extension to start this range over. Or we could bounce from 29 and we could go back up to the premium and just continue upside. Several things we could do. Did you see last year? We bounced and we continued up. So it kind of just depends on what they have planned, but I am going to be very cautious once we get here. I do think there's a high probability we continue. I hate to say it. We'll see though. We'll see what happens when we get there. I'm not going to try to predict the future, but I definitely think that there is a possibility we continue for other reasons. But that is kind of my bias right now, is like I would like to see price personally, because I'd love to get some short term. I think short term options would be really nice. I'd like to see price trade up into this box and reject it, and then from there I'm going to look for my setup on small time frame, and I would take an entry from here. So this is my point of interest for a short. Do you guys understand point of interest? What that means? You guys comfortable with that idea? Everybody comfortable with point of interest? Let me know. Speak now or hold your peace. Forever hold your peace. So point of interest basically is an area that you're looking for price to set up and do a specific thing. So for me, this is my point of interest for a short. What that means is if for some reason we open next week, well, not for some reason we open next week. If we open next week and do this, I will do that. So I'm going to tell y'all what we going to do. Okay, I see y'all replying. The good. So what I would like to see is price to bounce and come here next week. And then from there, I would like to see it continue to sell side. That's my idea for the week. Hold on, y'all. I got to sneeze. I'm going to have to mute this mic 1 second. Okay, sorry about that. So I would like to see that happen. Us to pull up. We just may not. Like, I don't know, y'all. Because using that range I was just showing you, it's supposed to go straight down. But if we do pull up, this area is where I'm looking for a short idea. And you can see how that dealer range, like look at how it was used on the day chart. Look at how when we got above it, we walked above it. Look at the bodies. Look at the bodies. Bodies tell the story, wicks do the damage. You telling me that the range path, using math, just happened to line right up cleanly with walking over that level when we went to the upside, and the way that we walked down that level to the downside. So now that we're below that level, I would love to see a bounce. Open Sunday night with a gap down and then walk up. Get above the gap down, go up into Tuesday. I would love that. Up into Tuesday or Wednesday, and then from there we make the next move down. If you pay attention to the last 2 weeks, has that not been the delivery? We open, gap down, we go up from there. We get above new week opening gap. They take some targets they have upside to try to grab some liquidity. And from there, what did they do? They fell into Wednesday, Thursday, Friday. Last 2 weeks, that's been your price action. Bearish weekly profile is a Tuesday high, Thursday low in most cases. Sometimes it can be a little different. You can have, a little bit of like into Monday. Sometimes it'll be Wednesday. But for the most part, if you just kind of get the candles and you try to line them up, they're typically going to be a Tuesday high, Thursday low for a red weekly candle. So last week, what did we get? What was last week? This is your Friday. We actually were green Monday because what? Trump posted what he posted at 7 a.m. Do you think we would have made that big of a move after being so bearish if he didn't do what he did? So we had a Monday high hitting that bearish fair value gap we talked about last week. When we hit that bear fair value gap, what did price do? We got bearish SMT. What does SMT do? It protects the stop loss. So once you get SMT here, put your stop loss there because they shouldn't take it. They should protect that SMT. So once that move started happening, if you got in close to the SMT, you could have put your stop loss there because they're not supposed to take that SMT. Okay? Boom. Hit the SIBI, pulled immediately back down, respected the bearish order block. Look at the bodies. Bodies tell the story, wicks do the dance. It's so many things I could tell y'all that would just be so, you would be like, girl, this is crazy. But look at that. Tuesday. So this is your high into Tuesday. And then boom, we fell through this level. So I prefer to see a pull up here so I can take a short entry out inside this red box. And then I'd like to trade it down to this next target. That's a pretty decent move. That's almost 2,000 points. This move here is bigger than last week's move. So if you heard about people making good money last week, there's definitely a potential we could do better next week or the week after. But I say that to say, you got to get a good entry. You can't just be like, oh, it's going to do blah, blah, blah. No, it don't work like that. Just because I have this idea doesn't mean it's going to play out like that. It could do things a million different ways. So you just got to be open for whatever's about to happen. But I would love to see us just hit these lows. Thinking about time, we have, like I said, non-farm payrolls next week. What's non-farm payroll? Not usually. Oftentimes with non-farm payroll, price goes on seek and destroy. If you trade anything ICT PD arrays, ICT logic, you have to be careful non-farm payroll because ICT taught us that is the week where manual manipulation is high probability. I have definitely noticed that when I feel like I can't see the chart, I typically will say when I can't see the chart, it's between Wednesday and Thursday of non-farm payroll. That, like, usually on those 2 days, I don't know I cannot tell you. And I hate it because I typically feel very confident about what I see. Baby, you mind closing that, turning that heat off? That boy hot. Thank you. I usually feel good about non-farm payroll. I mean, not non-farm. I usually feel good about the bias for each day and, like, the week. Non-farm payroll, Wednesday, Thursday is typically when I can't see. Like, I'll be like, I don't know. I can't tell. I swing trade, day trade. I'll do overnight, long-term, investing. I'll do all time frames. So, yeah. So that's kind of what I'm looking for, you guys. I would love to see an entry somewhere in here. Actually, we're going to throw an emoji on that boy. I would love to see price pull up here and get rejected. And I know it sucks for people who are long term, but if you ain't here for the long run, these couple of months, as long as they don't do something crazy, and I really hope that we don't, but these few months, like, you can be okay, because this is going to be some good opportunity if we can come out of this. I think what this administration does in the next few months is going to tell us a lot about if we can come. I don't know what's next after we hit that next target. I have ideas and I do have targets I can show, but once we hit that, I don't know what's next. Like, I don't know. Even with range paths, you have to wait to see what they set up. So I say that to say, After we hit this, I have 2 more targets that I think are very likely. Once we hit those targets, if we hit them, I don't have a clue what's next. I will also say we're in a window where price is typically a time where if we're going to make a pivot, we would make that pivot in the window. It's a big window though, so it could take a while, but if we're going to turn, we would likely do it in that window. So that was one of the things I told you guys to mark. We're inside a really big window. Remember I said on Threads to mark a specific day. I told you guys we're in a really big window. Price could pivot here, so we want to see what price sets up in this window. We could just accelerate. They could just use this window to accelerate. They could use this window to create a bull breaker to turn, and if you look at when this happened. Okay, look at when we made the bull breaker last year. Can you see the date? Okay, you see the date? So I told you to mark. So we'll see what we make from here. Okay. Any questions? We'll see what we got. You're gonna trade the 8-minute spreads. I do futures, options, shares, all of that. Whatever I can do. Obviously, I have a full-time job, so futures is tough, which is why I do a lot of swings. I do long-term as well. Long-term is I think I'm the best at long-term trading. I'm very good at that. I think it's mainly because I can take my time and think. The short-term, small time frame stuff, I'm cool, but it gives me anxiety. But I've gotten a lot, but I've gotten really, last week I did really good. I'm green for the whole week last week. I got a nice, little situation going on over there in my funded, so I'm feeling really good. But I say that to say I think I'm better at swing trading and long term, but I also can see really well, so I definitely think that I'm a decent day trader too. But I do everything. I'll do futures, options, whatever makes the most sense for the trade. Yeah, this would be swing trade. If we did this in a day, it would be crazy. Because you're basically talking, this is the day chart we're on. This would not be a day trade because NQ typically doesn't move this much in a day. It's possible, don't get me wrong. But if we made this kind of a candle in the day, look at the rest of these candles. There's not a candle that big. Even back here. That would be, you see what I'm saying? Okay, there's one right here. This candle right here. This was bigger than that. So it's possible, but I don't think this will be a day trade. It's possible, though. It's very possible. We could come down there and hit that by Tuesday and then pivot out on Tuesday. It's definitely possible. Yeah, it is possible. And then this, remember when I showed you Goldbach, this is the discount breaker. So we were always taught with ICT, buy at a discount, sell at a premium. So when I sold up here, I was trying to sell at a premium because in my mind, eventually we were going to offer sell side to these targets. I couldn't tell when. And when I talked about it last year, I said that I can't tell you when, but we're going to come back eventually. So for me, I sell it at a premium. And no one's going to tell me, I know it has to go back. It has to, because that's the rules. The algorithm has rules. So that's how I play in the rules. It's just kind of, it's one of them things. So I say that to say, I for sure have this. This is my idea. And validation of that idea would basically be if we close the body above here to keep going. Okay? Short idea would be to reject here to go to the sell side. So those are my scenarios. Pretty clean cut and dry. I don't think we would consolidate in this range. It's possible. But I think that this is one of these places where they would try to inflict pain, make people feel fear, try to get people to sell because they're going to want you to sell at a premium. So you're going to get people who should have sold up here, but now that it's fallen and it's on the news every day, Now they gonna want to sell. That's not when you sell, okay? The opportunity to sell was up here at a discount. Or excuse me, premium for longs. Premium for longs. This is where you would have wanted to sell. You don't want to sell down here. Now you getting into the place where even if it bounces, you're going to come back green. So you got to be smart about how you position your bread. And that's the thing that Michael always taught. And that's why I really respect him, is he would always say, pay the trader. Pay yourself. Don't hold trying to squeeze a freaking quarter out of a grape. Pay the trader. So I took off majority of my position. I do have some positions. I got a couple of things I'm in, but not a lot. I'm just still in stuff that I got some entries that I don't think we're going to get back to. So I didn't sell the whole position, but I did take the majority of my profits. Like I'm talking most of the stuff I'm in, I have 5 shares here, 10 shares there, 15 there. I think the biggest I have is 21 shares in something. Down from some pretty significant positions. Brian, don't let me forget to move my buy order on SPY. I got to do that tonight. I don't want to accidentally get in. But yeah. So that is my current idea. I hope that makes sense. I told y'all a lot. I probably won't talk this freely again. So I think this might have been an anomaly. But at the same time, I think without explaining it in the way that I did, it'd be hard to understand and keep up with why I see things the way that I see them. The last thing real quick before I let you guys get back to it is, again, the fibs. Oops, that's not what I wanted. I wanted the Fibonacci. Is that it? Yeah. So again, with fibs, I was always taught that price should seek to get to a minimum of 50% retracement. We have not reached the 50% retracement, and we have changed order flow. We had a change in the state of delivery weeks ago. So at minimum, at the absolute minimum, I would expect a wick. If they were going to stop falling, at minimum, we'd wick that blue line. Because the rule is that smart money can't buy at a premium. They have to buy at a discount. So at minimum, we'd see 50%. And if we look at last year, let's just do real fast. I think last year was a really good, I'm just going to go up in time frame just to make it easier to see. Okay. So first we'll draw from this pull down from October 23rd. That was in the golden zone, so you got a 0.79 retrace. Look at the body. Body tell the story, wicks do the damage. Look at the body. Perfect respect. Look at the wick down to the 0.70. Perfect respect. Look at this open. Open low. Look at the wick at 0.5. Clean. Okay, so you see the fibs. I'm not a Fibonacci trader, but I do check my fibs. But I just want you to see. So this is last year from low to wick high. And it came and we hit the 0.5. Wick just above the 0.62. Okay, so I think that we just need to be prepared for the fact that we're this close. You might as well hit the 0.5. Am I trading long during sideways moving or staying out? If we set up a long, I take an intraday long, but I'm not trying to trade against this. It's just too much pressure, and the likelihood that longs are going to get blunted is high. And the other part that is risky about trading against order flow, like I will say, for me to take a long trade, we have to close a body on the 81 time frame using my setup, and we have to do a complete change in the state of delivery. And even then, I don't hold, because when you're trading into something like this, like look at this down move, like that's a lot of pressure, and we just lost a major support that has held for months. So for me to trade long against that, I gotta see something that says smart money is in the building. Like, we got to see a move up that's something stupid where everybody's talking about it that day. Like, dang, that was crazy. Like, you want to see something like that so you know they're here. When smart money comes in, they announce themselves. We can't do that. We can't make those big candles. We can't close a body over a range like this by ourselves. Smart money has to be present to do that. So for me, I personally, if I do anything against this, I'm in a small position. Very small. And I'm not holding a bull position against that order flow. Like, anybody trying to trade long right now is crazy to me. You're trying to catch the biggest falling knife that we have ever seen. We've seen knives bigger than this, but you get my point. Like, this is, yeah. So I said it to say, if I took a long, it would be very short-lived. It's a scalp, and I'm not holding to target, and I'm in a smaller position size. I would only take a long is if we had something that was like this that actually held. But this trade, when we set up this week, basically from the point we set up, they showed we were not going higher. You can see it right here. So there was nothing to confirm that you could take a high. You see it? Clean. This literally is the candle of his announcement. From that candle, we did not go higher. Can I show you something else cool? This is why I made the post I made the other day. So this was that candle. I said this before we fell. Okay? No, go back and look at my threads, and I made that comment about how he cannot manipulate this. It's done. Manipulation is not going to stop this train that's moving. Remember how he put that post up on Thursday night? Remember Thursday night he put that post? Go look at Truth Social Thursday night at 4:11. This is his, he set it inside this candle. Look at how that candle became resistance. He cannot manipulate the market right now. So pay attention to when those alerts come out and mark the candle that the alert was on, and see how price treats that candle. This was your short entry on Friday night. I'm just saying. You see it? Price did not disrespect that candle. It traded right up into this resistance and dumped. So hopefully you guys kind of see. You said at 6:30. Oh gosh, that's just what we need. And the market will be open at 6:30. But yeah, so I don't really trade. I only trade with order flow. So my setup has to have high time frame alignment with short time frame alignment. No longs for me unless we close a setup on a big enough time frame. But right now, we're still trading on the aggressive trend line. Like, look at it straight. This is straight down. You see it? It's tough. Chase. He crazy. Yep. So hopefully that makes sense. I hope you guys enjoyed this conversation. This stuff is always fun to talk about, though, to me, because I love it. It's literally, I feel like it's like a strategy game. It's like a video game, you know? And I've like looked at so many different things and studied so many different things. And it is some things I do wish I could talk about, but I just don't really feel like, I don't know, there's so many thieves out here. And y'all know I don't charge, or I don't do that. I don't have a Discord and none of that stuff. I do talking groups, but I don't know. I just don't want to see people try to take and like do things with bad intention. So I try to be very careful, but I do be wanting to help. So there's like a catch-22 of like wanting to help and also not wanting to feed the snakes, you know? But yeah, so 6:30 emergency announcement. Thanks for the heads up on that. I hadn't heard that yet. Yeah. So what kind of methods do you guys use? What kind of methodologies are you guys using for how you trade? I'd love to kind of hear. I always said it would be cool to trade with somebody else, like trade live with somebody who trades completely different logic. But the way my brain thinks, and I think like I'm processing fast. Like when something's happening, I'm like, okay, da da da, boom, this, that, because I'm reading the candles as it's happening, and I've put so much in my head that it's wild sometimes. Like trying to trade with me, and I know somebody probably be like, girl. I have a couple of friends where I will trade with them. My girl Kristyn and my boy Paul. We trade sometimes, and then sometimes my girl Franny will join us. But we have like a language. But I know I have a very dominant trading personality, so I'll be like, I know they want to kill me. But if there's ever anybody out there who has a completely different trading methodology that you use, I would love to, talk and just kind of see the differences in what we see, because there's always confluence at the end of the day. There's always going to be alignment across setups that show the sweet spot of when the trade is real. So anyways, that's kind of, yeah, you're so welcome. And thank you for always supporting me. I appreciate you. Yeah. Yeah. Oh, you said you would have been. Yeah, it's the way that we could see it is kind of hard to explain, but long story short, I mean, even if you used on this setup, so let's go down and look at the small time frame, right? I thought this was actually a really cool setup on that night. Okay. So, let's mark a couple of things. So, where's our midnight candle? I have a horrible lag, so I'm sorry if you see it. Okay, that's not it. There it is, midnight. So midnight candle, this is midnight candle open. So let's annotate it real quick. All right, so that's midnight. So can anybody tell me what ICT says about midnight candle? Does anybody know the saying about midnight candle? Can you put it in the comments? We're going to give a minute. I want to see if anybody knows. What does ICT say about midnight candle? What is his saying about the midnight candle? Anybody know? What's the significance of midnight candle? Anybody know? This one's really good. I love midnight candle. And I will take the setup off midnight. Anybody know? Nobody? Hit the like button. If I see the likes go up a little more, I'm gonna tell y'all this tea. This is some good tea though. I use this every day. Y'all know about midnight candle? All right, I'm giving just one more second. Nobody? What does ICT tell us to do with midnight candle? Not just market. What does he say about midnight candle? Nobody? Okay, so midnight candle. ICT tells us that you want to buy above midnight if you're bearish. Write that down. And you want to buy below midnight if you're bullish. I've been trading with midnight candle for years. Okay, I will tell you in most days, unless you're going to have a lot of manipulation that day, most days it's 100% fact. So midnight candle is also the end of the Asia trading session. So you notice how prior to midnight, price basically was flat. Like you could have literally put this box above midnight and price just stayed below that box. You see it? So this is Asia. This is Trump's tweet. Then everything in Asia held below the CE of this candle. The consequent encroachment is bearish. Look at how every time they came above this range, rejected. It did a last swing above, but that's manipulation. So to leave consolidation, price must manipulate. So consolidation, manipulation, distribution. Midnight candle, that's your pivot. This is where institutional orders come in. This is the start of the day candle. Okay, the start of the way that the day candle distributes. So if you're bearish and you see a bearish setup above midnight, it's high probability. Because what do we need to do? We just need to know up or down, right? Up or down. So if price was bullish, why would it set up a bearish setup above midnight? Okay? You see how it's like it's a computer. Computers have rules. Play the rules. If you play the way the rules say, you're more likely to be right. Doesn't mean every time it sets up the way the computer's rules are, it's going to work. Because sometimes there's something that we missed, okay? But I say that to say, midnight, you get a pivot, okay? It's funny, this candle here is an institutional order block. It block price. So you've got midnight, and then you could also say this is a breaker. It's very little, but it's low, high. Wait, would it be? No, that ain't a breaker. That ain't no daggone breaker. Let me look. Hold up. No, that's not. Because it didn't take that low. So it's a mitigation block. Mitigation block is similar to a breaker. They're just like a certain type of order block. But breakers are like, of all the order blocks, breakers are like one of the best. Okay? So this was not a breaker. It was a mitigation block because you have a higher low here. But notice how this candle, if you wanted to take a short, notice like how it gave one last opportunity. Look at how the bodies respected this. The bodies of these candles respected that order block. Ran up here, hit that wick, midnight, gave up the ghost. Look at that. Beautiful. And that's a 0-0 candle. That's a start of an algorithm. What is that? 11. So you have a run of liquidity at 0-0 off of an 11, which is a institutional order block. So yeah, pretty fire. Pretty fire. Look, 0-0 liquidity target. And then your low. What's that? 0-0. Oh, that's crazy. Hold up. Let's look at that. So here's the low from when Trump made his post. 1603. That's a 19-0-0. That's a 16-17 low. Look at that. Oh my gosh. You can't make this up. You cannot make this up. Yep. So yeah, it's pretty crazy. I'm glad you guys like these. They're fun for me to talk and just, I always love talking about the market and stuff, but I feel like sometimes my friends probably tired of me. I love it though. It's so much fun. And I have been down so many rabbit holes, but I definitely say, just going back real quick to put a pin in this midnight candle, you see how the midnight is, I always say price is like a jump rope. Okay, so they swung, you see how they sent price up over midnight and they set up, and there's other things up here. You got a bearish balance price range. You got a bullish fair value gap up, use as support. Price broke above it with a bearish fair value gap. That's hella bearish. Closed below that level that held as resistance all night and dump. Okay? And then if you even just think about the fact that this is a news candle because Cheeto decided to insert himself in the market, trying to manipulate the market, now price is going to treat that candle like a news candle. So that candle became resistance. And when it was made, it's so many, y'all, it's so many things. So let's say you miss all this. You like, all right, well, let's wait for price to close below the box. When it closes below the box, you can wait and see if you get another entry, because the box is potentially going to act like resistance. And look, it just gave, look how much further down it is. So this, you have high, low, higher high, lower low. That's a bear breaker. They close below bear breaker with fair value gap. Measure move, may measure move here before bouncing. Like you can see it. Try to get good at reading like measure move or where stuff is at with your eyes, because then you'll get better at just seeing it. See that? Look at that. Look at that. Ooh! What'd I tell you? What'd I tell you? But that's a bear breaker. So look, price tried to come up. Boom. So it becomes an order block. That's why I say breaker. What's the order block? It's going to be the up close candles on the down. So we're falling, right? So these are order blocks. This isn't going to be as high probability as something like this. And honestly, if this would have made a higher high here and took this out like with a wick, this would have been even higher probability. But either way, just keep in mind, like at this point, you're falling, you're getting to be at a short time frame premium. So this is definitely not going to be as high probability as entering up here. You know, you just got to be okay with that risk. So, yeah, it is. It's crazy. It has definitely been very advanced. Like, I feel like sometimes it's been fun because I'm getting to test my skill set. But at the same time, I know if I was just starting to trade, this would be whipping my butt right now. So, you know, if you feel like you're not comfortable just yet, like that's okay. Just wait. Because the best thing you can do with your capital is preserve it. Preserve it. I have a quote, and let me actually get it real quick. Real fast, if I can find where my mouse is at. I have a quote I put in my OneNote about trades I want to take. And like, for example, Friday I missed the best entry because it was overnight, and I like to get my sleep. So I was knocked out. So the trade I took my trade Friday. I don't really like to push it on Fridays because I do not want to give money back. I don't want to do anything stupid because I have done that so many times. I had to sit with that over the weekend. So I'm like, I'm not doing that. Okay? But I had in here, let me just real quick find this quote I put, because I do think it's helpful. Let's see. It's in here somewhere because I just saw it. Okay, so I'm gonna read this first about midnight. I have, if you're bullish, enter below midnight, and if you're bearish, enter above midnight. I wrote this down May 27, 2023 at 11 a.m. This is my epiphany that I had, and I always try to think of this. I couldn't quote it exactly, but this is like what I try to focus on now. I only trade what falls into my lap. I never trade anything forced. So if I start having to think too hard, because I can see a lot, but if I have to start processing and being like, what's doing this and then that, and then this is happening, and blah, blah, blah. If I got to do all that, I'll be like, girl, you are already doing too much. Like, it ain't a trade. But unless I can see it, like plain, like this high time frame setup, this low time frame entry, unless I can see it plain, I'm not taking it. So I would tell yourself, if you can write down, I only trade trades that fall into my lap. I never force anything. Okay, don't trade anything forced, because the worst thing you can do is trade something that you really don't see and lose money. And money gained on a bad setup is not good money. Okay, because all that does is reinforce negative things that are going to make you lose money in the future. And I think I'm very qualified to tell y'all this advice because I have done these stupid things. And I don't want to see you guys do stupid things, okay? So Don't force it. If you can't see, if you are not confident order flow has flipped, wait. Just wait. It's better to wait with your money than not wait and they take it. You know what I'm saying? So yeah. But anyways, I am gonna go ahead. Brian, is the game almost over? Oh, you know what? He said if you look at the score, it's over. Michigan's blowing them out. Yeah, they up by 30. But yes, I hope you guys got something out of this video and enjoyed it. This is a lot of fun for me. And I definitely think I'm ready. I do think I'm going to chart some stocks. See if I can find some entries. But I can't wait for open. I really think we're going to get some good stuff at open today. I think Asia tonight is not going to be like, this will be a night to stay up. I feel like we might see something big tonight. So we will see. But I hope you guys enjoyed the video. Before you leave, please hit the thumbs up button for me, y'all. Just give me a little support. You know what I'm saying? If you like these videos, I need to see the love, okay? I appreciate you, though. I hope you guys have a great week. Be careful this week. It's non-farm payroll. So for me, I'm only trading until Wednesday morning. I take the first trade Wednesday morning, and then I'm off. And then I'm off till Friday after the news. I don't play with non-farm payroll. If there's a week where I will literally give back everything I just made, it's non-farm payroll week. Do not try to push yourself non-farm payroll. But non-farm payroll is definitely known for giving really, really good moves. So if you get a good entry, don't be scared to hold, and move your stop. Because we do get really good moves non-farm, and that's why a lot of times I think people have a hard time not trading it. But at the same time, don't be greedy. Don't let them drag you. Don't let them drag you. But that's all I got. I'm about to let y'all go and get up out of here. I'll talk to you later. That was fun. I like doing lives.